Well, folks, the final stage of the market crash has finally started. And let me be the first to say, thank Lord, this final market stage collapse has finally started, because this has been something it's so anxious, right? It's such an anxious feeling. We know we've got the final crash to happen, right? And it has officially started now. And I want to take you through in today's video exactly what's going on out here, exactly how this is going to play out, in my opinion, and kind of show you many various things that are very, very important. But let's be very clear. We need this before we can ever dream about a multi-year bull run again. We need this final stage to occur, the final stage of the collapse of the Dow. Until we get that, we can't even dream of a multi-year bull market again, okay? Until then, we're just playing games. We're just up and down and all around. We ain't really going anywhere, okay? If you want a bull market, this has to happen. Okay. Hope you guys enjoyed today's video. As always, thank you every single person that's subscribed. Got a lot of important stuff to show you in today's video, and exactly kind of how I'm thinking about this. So here today, Dow Jones Industrial Average down over 600 points, and that was the worst index today. It underperformed every single other index out there, Dow Jones Industrial Average. The Dow Jones Industrial Average has fallen over 1,000 points just in the past 2 trading days. Yes, it has officially started here with the Dow. The SDow, which is basically an inverse of the Dow, 3x leverage ETF, is up about 9% in the past 2 trading days. It's pretty darn simple. The Dow goes down where it should go. SDow is going to do very, very well while this kind of collapse happens here. If you pull up I have a list on my trading view essentially of the top of all Dow 30 stocks essentially. And if you pull up the top 7, something very interesting is happening here, where many of the stocks that were holding up very well in the Dow, right, we're starting to get hit in a major way. And many of these stocks have held up tremendous. Many of these stocks are actually up in the past year. Isn't that crazy to think? With all the damage we've seen, the NASDAQ, tech stocks, growth stocks, many of these stocks are up. But here's what's happening now. These stocks are reverting, and they are coming back to reality. They will no longer be the place to hide out money, and they will fall, and they will fall substantially as the recession really gets underway here. Okay, now, check this out. This is extremely important for every single person to watch this, to understand what's going on here, because you'll be able to identify situations like this in the future and understand when things are screwed up, and man, are they screwed up. Check this out. This shows you the Dow Jones Industrial Average versus the NASDAQ since January of 2022. Now, there should always be some sort of divergence between the Dow Jones Industrial Average and the NASDAQ on a downward market. The NASDAQ should always do worse. In a bear market, in a crashing market, whatever you want to call it, than the Dow Jones Industrial Average. But usually it's about 3 percentage points to maybe 7 percentage points. Well, here we are. Since January 2022, we have the Dow down roughly 9% and the NASDAQ down roughly 31%. So which means we have over 20 percentage points of divergence here. That should not be like that. That will fix itself. And we will get into a territory of 3 to 7%. It's just a matter of time. When things happen that aren't supposed to happen, they get fixed in the market over time. And that's whether you're on the upside or the downside. It's as simple as that. And these babies will converge together, essentially. Next up here. This is what I call the false hope squad of these sorts of stocks, the home builders. And if you look at a 1 year of these stocks, it's like they've been hit, but they haven't even been hit that hard. Lennar is down 3%. Pulte Homes is down 5-6%. Toll Brothers is down 11%. CCS is down 16%. KB Homes is the worst of the bunch, down about 22%. Okay, this is the false hope squad. A lot of folks think, and I think the algorithms think as well. I don't think it's just people. They think like, oh, everything's going to be fine with the home builders and those sorts of things. But what are we actually seeing? What's the reality? These home builders, their backlogs are drying up rapidly, right? They're drying up rapidly in a time period where unemployment's still insanely low. And we know as soon as unemployment starts to tick up in a meaningful way, what do we know is going to happen? Backlog's going to dry up even to a much larger extent, right? We got a record amount of homes and apartments all hitting the basically United States of America over this next year that are opening up. That's not going to be ideal in terms of this scenario, right? And Also, we haven't even seen the Dow and the S&P 500 get hit as hard as they will get hit, which is another factor that has to come into play here. Because remember, those are what the masses are really invested in, the Dow stocks, S&P 500. As that really gets hit, that's when people really start to feel it in a meaningful way and start to dial back on, oh, let me go buy a new home. Let me go design this. Let me spend all this money on this, right? And when you're in a tighter, let's just call it a tighter budget situation, even if you were to buy a new home, you're not going to do nearly as many upgrades as you would have usually, right? Which for the home builders, all those upgrades they're able to sell, man, does that bring in a lot of money. And what we're seeing continuously is all these home builders, their backlogs are drying up quick. Now, let me tell you something I heard on the KB Homes conference call last night. I listened to this conference call while I was laying in bed waiting to fall asleep, okay? And let me tell you something very important. What they said is they're waiting to essentially move down price in many of their communities until their backlog in those communities kind of gets, let's just call it, sold through essentially. Now, KB Homes, their cancellation rate just went to 68% versus 13% at the same time last year, which is another disaster. But they're just counting the days essentially until they get these communities where they're pretty much the backlog sold through, and then they're going to drop price because they don't want to do it right now, or it's going to push up likely cancellations even more from folks. So they've telegraphed this whole story essentially. And so what do you think is going to happen with real estate prices over this next 1 to 2 years? They're going to go down. It's going to go down pretty substantially. It's more of a question of 10%, 20%, or 30%. I think that's the biggest question. What else did KB Homes basically tell us? They are canceling orders to buy new lots, buy new land. They're not even interested, which also shows you that the biggest home builders in the United States of America understand that the home building market's not coming back right now. It's not coming back anytime soon. If they were confident that the home building market was going to come back later this year or next year, they would be buying as much land as they possibly can. These folks are canceling their land purchases. They're walking away from land because they understand this is likely going to be a multi-year down cycle for real estate. And it's not something that's magically fixing itself tomorrow. You'll get these 1 week or 1 month tick-ups, essentially, where it seems like home demand's fine and, oh man, everybody's coming back and buying homes, all to get your hopes shattered again and again and again. This is the false hope squad. Question is, how long can the false hope squad keep this facade going for? Maybe a few more days, maybe a few more weeks, maybe a month, but eventually they will come down substantially. Now, in terms of this crash and this bear market, right, it's been very orderly, actually, very orderly. And the first thing that got hit is kind of the Cathie Wood spec stocks, right? And if you look at where, I think Cathie Wood and the ARK fund was really the most famous version of the market we were in at the end of 2020 and into 2021, right? The beginning of 2021. And ARK peaked around January, February 2021, along with almost all spec-related stocks, right? And also the SPACs, all those things, they all peaked right at that time. And that was when the first stage of this market crash started, okay? Then, after that, it was big growth stocks. Those babies started to fall in November of 2021, and it got much worse as time ticked on there. Then, after that, big tech started to fall. That started in January of 2022. Then we needed two specific stocks to fall. And until those two specific stocks to fall, you can't really even dream about getting close to the end of this cycle. Tesla was one of those, the most famous stock pretty much in the market, the stock that the most options are played on a given day, huge retail stock as well as institutions nowadays, right? And the ultimate hope, excitement type stock in the market. And that baby started to fall in the spring of 2022. It peaked out kind of on the last upward cycle, if I recall. It was somewhere around April, I believe, of 2022. And then from there, it had a vicious downward cycle for the next couple months. It came back a little bit, but not even close to new highs. And then we had another collapse, obviously, in the fall time and into the winter time. Then we needed Apple to fall. The Apple fall started in late summer of 2022. I believe it was August of 2022, if I recall, was when the collapse started. It was kind of the end of August, if I recall. And nonetheless, it's just been kind of down and down and down more. By the way, later in this video, I'm going to tell you if I think Tesla stock, Apple stock, and these sorts of stocks have bottomed or they have a lot further to fall. Then the last stage we need is the Dow Jones Industrial Average stocks, the ones that held up so well in 2022. If we're not going to dream about a bull market, a multi-year bull market, till we get those babies down. And we need those down substantially. And that has just started to transpire here in January of 2023. And that's going to be, probably a 3 to 6 month cycle, in my opinion, in terms of that. And you'll have times where it comes back and it looks like, oh, maybe everything's fine. And then it just drops lower and lower and lower. Very similar to how every single one of these played out. That's how every single one of these played out. Every single one, right? Now, let's be honest. The only reason the Dow stocks haven't already collapsed is because we've had this one thing going for us. And it's what they talk about time and time again. Unemployment's so low. People have jobs. We're going to be fine, right? What happens if you lose this? What happens if that unemployment starts to go boop, boop, boop? You have nothing. You have absolutely nothing at that standpoint, right? Nothing. Because we know the Fed's going to continue to work against the market. We're going to talk about the Fed as well. We know the Fed's going to continue to work against the market for some time. So the Fed's not coming to rescue, not coming to save the day, right? And we know inflation's, even if it comes down, which we'll talk about inflation, it's still up there. So the one thing we have going for ourselves is, unemployment's so dang low. If that changes, you have nothing at that point in time, right? And that's the only reason the Dow stocks haven't already collapsed. And think about tech layoffs and think about how substantial these have been. And these companies are the smartest companies in the world. They have the most data of anybody. Think about it, right? These companies run the world. These companies run the world. Who runs the world? Microsoft runs the world. Amazon. What do you think the internet's running on right now? What do you think this platform I'm recording this video on is running on right now? You're watching this video on YouTube. Who runs YouTube, right? Google. The whole world is run by the biggest of the big tech companies. This whole show. Amazon, Microsoft, Google, companies like that. Meta. And these companies, what are they doing? They're laying off employees. And they have the most data. They're the smartest. These companies, their employee bases, their executives, the board of directors, they make many of the Dow stocks look like a clown show, to be quite frank. And the Dow stocks have been the ones that look smart so far, but they won't for much longer. There's a reason these stocks massively outperform the Dow stocks over the past decade and will again over the next decade as well. Now, the market, I see an issue here, okay? The market is everybody's expecting 0.25% percentage point move for the Fed, okay? A couple issues with that. First issue is, let's admit, the Fed's still raising rates. The Fed is still raising rates. Even though Goldman Sachs earnings are falling off a cliff, even though backlogs of home builders are falling off a cliff, even though inflation's coming down rapidly, the bottom line is the Fed is still committed to raising rates. So that's something we know we're going to get. Now, the other part of this that's a potential problem is, what happens if they raise 50 basis points? The market's not even expecting that. So then we'd have another massive leg lower for the market, right? Everybody's expecting this. And the only way you could see a positive outcome for maybe the market is if the Fed didn't raise at all. But let's be honest, they're raising. It's just a question of how much are they raising. And now everybody's expecting 0.25. What if they come in with 50 basis points? No one's even expecting that. That would be ugly, right? Now, we got some numbers out here today. I don't know if you guys saw this. PPI came in, Producer Price Index, declined 0.5% for the month. So on face value, that looks good because it's like, okay, another signal that inflation's falling. But you got to ask yourself this very important question. Is it just falling because it's falling, or is it falling because, let's say, demand is starting to get hit in a major, major way? And so that's the reason wholesale prices are starting to fall. And I think that's a fair question, right? And we're going to move from a market of 2022, everybody talking about inflation, to as 2023 rolls along, we're going to talk less and less about inflation and more about recession. And oh boy, things are falling off the rails. And last year, if you got something like this would have been great news. The Dow, if you got this news last year, I can tell you the Dow would have been up 600 plus points today. Not in 2023, because now everybody looks at that and they're like, oh boy, what's going to happen with corporate earnings? Is the economy falling off a cliff here, right? That's the thought process. Look at this. Retail sales fell 1.1% in December, slightly more than the 1% forecast. Those numbers are not adjusted for inflation. So the latest reading reflects both receding inflation and tepid consumer demand during the holiday shopping season. Think about that. Retail sales fell in December, not adjusted for inflation. That's bad. That's really, really bad. That is like horrible. Because if you were to adjust it for inflation, what are we down? 8%? 9%? Oh boy, okay. That's recessionary. That's bad news. Bad news, right? Now, oil and gas stocks, they've been the popular hideout in 2022, and I try to warn people. It started pretty much in the spring, summer of 2022, try to warn folks about these specific stocks, because the bottom line is a lot of people looked at these as maybe hideout candidates, but the more recession data you have come in, the more these stocks are going to go down and down and down and down and down, okay? That's the bottom line with this. If the economy is fine and everything's great and oil demand's super high, okay, but the more recession data you get, the more these are going to get hit. And all you have to open up your history book, okay? Your history book's previous stock market crashes. And you look back at the great financial crisis, and what happened? Stocks like Chevron, they flew to the moon right before unemployment started to tick up massively. And then they fell, and they fell, and they fell, and they fell, and they fell, to kind of form a double bottom here, essentially, right? Chevron was $100. It was $100 before unemployment really started to go crazy. And by the end of the show, it was $58, right? Chevron. So this is, and you can look at pretty much all the oil and gas stocks. It happened all them. Their stock prices fell 30 to 60% in almost every single scenario, some even 70% in that fall, right? And the more recession data you get, the more those babies are going to go down and down and down and down and down. That's the bottom line when it comes to that, okay? Banking, same exact situation. I'm somebody that personally owns JP Morgan stock in my dividends only account. The most well-run bank of them all. But the bottom line is those bank stocks are going to fall more. The more recession data comes, the more those stocks are going to fall. The more they're going to go down. That's the bottom line. It's simple. It's a simple game. The more recession data you get, the more banks will fall. The more recession data you get, the more oil and gas stocks fall. It's just the way it works every single time. Now, I think there's stocks that you should be very scared of some of these stocks. And I think one of these stocks is American Express. Now, I think the stock could get hit very hard as 2023 ticks along. The thing with American Express is this used to be a company that was known for, giving credit cards to people that made a lot of money, had great incomes, had high net worths, and had great credit and weren't an issue, right? But what I've seen, and I talk to a lot of folks, what I've seen is American Express, I think, is giving a lot of credit cards with way too high of possible balances to very questionable folks that are not going to pay American Express back. And American Express will get burned in a significant way. American Express, in my opinion, based upon what I see in the folks I talk to, I think they've gotten very greedy. And they've gotten very loose with their policy. And the reason they've gotten so loose with their policy is because we've been in a very good economy for a long while now. And they're chasing growth, as with all these companies. And unfortunately, greed has been the issue that's caused for everything, right? Think about all the crypto exchanges that went down. They didn't go down magically. They went down because of greed, right? And I'm looking at many of these credit card companies, and I think they've gotten very greedy. I think they've given a lot of credit to a lot of folks that just aren't going to pay it back over the next 1 to 2 years. And I think American Express is going to have a long list of folks burning them for $5,000, $10,000, $15,000, $20,000, $30,000. And I'll give you a lot of specific examples, but I don't really want to go there because it's like personal details I kind of know out there and things like that. And they've gotten greedy, man. They've gotten very greedy. And they've left a lot of their core principles. And don't be surprised if their charge-offs go way up. Delinquencies go way up for American Express. It's not going to be pretty, in my opinion, there. Okay. Now, there's other stocks that folks are expecting are going to go back down to new lows, so you can get them, for as cheap as they were previously. Okay. Dream on for some of these stocks, and I'll tell you the ones you might have that potential, and there's certain stocks you aren't. Netflix, no. A lot of people are hoping, maybe it goes back to the 160s. Nope. Dream on with Netflix. Could you maybe get Netflix at $250, $240 if the market drops big? Sure. But anywhere $160? No. Okay. Dream on about that. This stock bottomed a long while ago. And the thing in this market is different stocks bottom at different times. Netflix bottomed way before a lot of stocks had even started their major fall. At this point in time, Apple hasn't even had its major fall yet, right? This is the way a big, long, annoying bear market works out. It takes a while. And these different stocks bottom at different times. Meta, you want to get at Meta at 80? Dream on. This baby bottomed a while back. Could you get Meta in a big crash down to 105, 110, 115? Sure. If you got a significant crash for the NASDAQ back down in the indexes in general. But in terms of that 80 something, no, that was literally peak fear capitulation, massive freak out in regards to Meta there, right? Shopify, another dream on situation. You think you're going to get Shopify at 25? Nope. That ain't happening. Can you get Shopify at 35? Can you get Shopify at 33 in a major crash again? Sure. But that was a massive capitulation, final sell-off there for Shopify in terms of just getting absolutely wrecked, right? Now, there's other stocks that hit lows recently. These stocks are possibilities that they'll hit new lows. One of those examples is Apple. Apple's definitely a stock. Could you get Apple at 120 again? I think it's a real possibility. Could you get Apple at 100? I think it's a real possibility. I'll be honest. Everybody's just waiting on Apple's numbers. That's what everybody's waiting on in this Apple story. They're waiting to say, we've got to see confirmation that Apple's numbers are starting to get bad. If we get confirmation that Apple's numbers are starting to get bad, then we can dump out of this baby for the final stage of the Apple crash, down to 120, 110, and 100. Okay, but that's what everybody's waiting for. They've sent this baby down already, 20+%, but they're saying, we've got to get confirmation from the company that EPS is about to tank and revenue is about to tank. Okay, till they get that, they can't do it. Google, could you get Google back in the 80s, 83 or so? I think that's a possibility. This stock, any of these stocks that kind of have bottomed in the fall time, I think it's very possible that over the next few months, they could hit a new low. And I would definitely throw Google into that category. From what I'm seeing, YouTube ad revenue, not good at all, man. Not good at all. Very bad. A lot of advertisers have pulled back huge. I know a ton of YouTubers. All of them have negative stuff to say about basically making money from ads. It's the worst it's been in years in regards to that situation. And don't be surprised if Google hits back down to there or even new lows over the next few months. Okay, Microsoft, I think it's a maybe. You know, could the stock see 214 or 200, something like that? I think it's a maybe. It's another one of those stocks that hit a bottom this fall, and I think there could be in the next few months it could hit a new low essentially. Tesla, I think is another one. I think it's a possibility the stock could go. I've always said, in kind of the worst case scenario, I saw Tesla kind of going in the $90 or $100 range, right? It's a possibility. Obviously demand's, obviously pretty insane right now because they dropped prices, but we're going to get more clarity on what that might mean for EPS. What if Musk says, they're going to wreck margins here in the short term? What does that do for the stock? Does Wall Street have another big sellout? I think it's definitely a possibility. This is one that hasn't bottomed that long ago, right? And it's come back, but it could just be a false kind of come back here, and over the next few months you could go into this range essentially, right? Which for all us Tesla longs is a tremendous opportunity if we get that. The stock's already a tremendous opportunity, but obviously, there's a big difference between 90 and 128. You can buy a lot more shares, right? With that, right? Now, the important thing I think for all long-term investors to keep in mind in this final stage of this crash essentially is to make sure you are planting your future trees, okay? Plant your future trees, because in this final stage of this crash, you're going to get, everything's going to be an opportunity. Right now, I feel like most stocks in the market are a phenomenal opportunity, but not every stock. I think in this final stage of this crash, everything's going to be an opportunity. Like it'll be one of those that you can't go wrong, essentially. If you have any sort of long-term horizon, whether it's a dividend stock, a value stock, growth stocks, it's going to be a feast. Right now, I feel like it's just a feast, and over the past, let's call it 3 to 6 months, I feel like it's just kind of been a feast of like growth stocks and those opportunities and some value stocks. But I feel like by the end of this final crash, you're going to have a feast of growth, value, and dividend stocks. And so make sure you're planting your trees, because those are trees that will throw you off money for years and years to come. And, just be ready to take advantage of it. And like I said, from my standpoint, I'm about sick of this crash, to be honest. I'm ready for the next bull cycle. But I'm of the understanding we can't get that next bull cycle until we get this final stage done. We have to get this done. We have to get this out of the way. And then we can think about having fun for the next 2, 3, 4, 5 years. But we have to experience this, and we have to get this final stage done. It's like, I don't know. It's like doing a workout you really don't want to do, and it's going to be hard. But you're like, dude, we got to get this done, because it's going to make us stronger. It's going to put us in a better position to win over time. So hope you guys enjoyed today's video. As always, if you want to support the channel, you enjoy my content, you want to support on Patreon, there will be the pinned comment down there. You also get access to see all the stocks I'm buying and selling in the portfolio there. Appreciate everybody. Much love as always, and have a great day.